Before every great move, every bull run, every crash, there's always a signal. Not on the chart, not in the news, but in human behavior. That's what Jesse Livermore believed. The man who made and lost some of the greatest fortunes in history didn't rely on predictions. He relied on timing. But his definition of timing wasn't about price levels or technical signals. It was about psychological shifts. He used to say, the big money is not in the buying or selling, but in the waiting. And that waiting, that precise awareness of when the crowd changes its mind, became Livermore's secret weapon. Think about it. Every major move in market history, from the roaring booms to the devastating collapses, was always preceded by one thing: a change in emotion, a change in tone. The excitement turns to confidence, confidence turns to arrogance, and arrogance turns to blindness. That's when Livermore would act, not because he knew what would happen, but because he could feel what the crowd was about to do. He watched the tape, yes, but what he really studied was the psychology behind the tape. He noticed that before big moves, volume changed, not because of new information, but because emotion entered the market. Traders began believing. They stopped analyzing and started anticipating. They called it momentum. He called it the signal. In 1907, when the market cracked and panic gripped Wall Street, Livermore wasn't surprised. He'd seen the signs months earlier. He said, "The market is never wrong. Opinions often are." He understood that every top and every bottom was built not by data, but by emotion disguised as logic. The same pattern played out every time. A rising market attracts optimism. Optimism becomes certainty. Certainty blinds traders to risk. And when reality finally strikes, panic replaces reason, violently and without warning. But Livermore didn't need warning. He had timing, because he understood the rhythm of human nature. He saw what others refused to see, the invisible point where confidence becomes danger. And that's what this story is about. Not how to call the top or bottom, but how to read the signal before the big move. The moment when emotion betrays the crowd. The moment when discipline becomes the difference between fortune and failure. We'll explore Livermore's blueprint, how he recognized crowd psychology through market action, how he separated intuition from impulse, and how he used patience like a blade to strike only when the signal was undeniable. Because timing, in Livermore's world, wasn't luck. It was mastery of human nature. So let me ask you this. Do you chase price when the crowd is loud, or do you listen for the silence before it moves? Comment your answer below, because that question, that one decision, determines whether you're a participant in the crowd or a master of its rhythm. Next, we'll enter the paradox, why most traders mistake movement for opportunity, and how Livermore discovered that the best timing often comes from stillness, not speed. The market moves fast, but the mind must move slow. That's the paradox Livermore built his life upon. The market seduces you with motion, it whispers urgency, it rewards activity, and yet the trader who moves less often wins more. Jesse Livermore called it the great deception of the tape, because what you see isn't always what's real, and what's real often appears too late. Every trader feels this conflict, that inner tug between doing something and doing the right thing. The chart moves, you feel it in your pulse. Your hand hovers over the mouse, your mind races through possibilities. You tell yourself, if I don't act now, I'll miss it. But that sentence, that precise feeling of urgency, is the same emotion the crowd feels before they make the wrong move. Livermore understood this rhythm of emotion like a maestro. He said, the desire for constant action, irrespective of underlying conditions, is responsible for many losses on Wall Street. And that's the heart of the paradox. The market punishes impatience disguised as opportunity. You see, when traders win, they crave more of that feeling, not the money, but the emotion, the thrill, the dopamine spike of being right. And so they start mistaking activity for skill. They chase noise. They blur signal with motion. They enter trades because they can, not because they should. Livermore learned this lesson the hard way. Early in his career, he made money quickly, too quickly. He started believing he was in sync with the market, but he later realized he wasn't in sync with the market, he was addicted to it. He once said, "A man must study general conditions to size them so as to be able to anticipate probabilities." To Livermore, that word, probabilities, was everything. It meant removing emotion from the decision. It meant waiting for confirmation, not excitement. He didn't care about being first, he cared about being right. And here lies the paradox. Most traders think timing means reacting faster than others. Livermore believed timing meant waiting longer than others. When the crowd got restless, he stayed quiet. When they got euphoric, he grew cautious. And when panic filled the air, he sharpened his focus. He was detached, but not cold. He felt everything, the pulse, the fear, the excitement, but he never let it dictate his actions, because he knew that every emotional move by the crowd would create the next signal. He treated the crowd's emotion like weather. He didn't try to control it, he read it. He watched for when the clouds began to shift, not the first drop of rain, but the change in the wind. And that's when he would act. Livermore knew that markets are just mirrors reflecting our emotions back to us, magnified, amplified, and distorted. And so the paradox is this: to time the market, you must time yourself. Because the true signal isn't in the ticker, it's in your reaction to it. And that's the point most traders miss. They study the market, but not their own mind. They analyze patterns, but ignore their patterns of behavior. And by the time they notice, they're no longer observing the market, they're chasing it. So, let me ask you this. When the market starts to move fast, what do you feel first? Curiosity or fear of missing out? Comment your answer below, because that single emotion might be your first signal, not from the market, but from yourself. Next, we go deeper, into the psychological trap Livermore warned about. The moment where emotion turns into illusion and illusion turns into disaster. The greatest danger in the market isn't losing money, it's believing you can't. That belief, that quiet confidence that you've figured it out, is where most traders walk straight into the trap. Livermore called it the invisible danger of success. Because after a winning streak, after a few well-timed trades, after that intoxicating sense of being right, the trader doesn't just hold positions anymore, he starts holding beliefs. At first, it's subtle. You make a trade, it works. You make another, it works again. You start to think, I understand the market now. But Livermore knew that sentence was the beginning of every downfall. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, or the get-rich-quick adventurer. He wrote that after losing millions, not because his analysis failed, but because his mind did. You see, every trader hits a point where logic gets replaced by emotion dressed up as logic. You don't stop thinking, you just start thinking emotionally. You start finding reasons to support what you want to believe. Confirmation bias becomes your trading partner. And this is the psychological trap Livermore warned about, when emotion begins to masquerade as analysis. It begins innocently. You tell yourself, I'll sell when it hits my target. But when it does, you raise the target. You say, it's strong, I'll hold. And when it starts to fall, you tell yourself, it's just a pullback. Every decision feels rational, but it's not. It's emotional justification in disguise. Livermore once said, it is not the thinking that makes money, it's the sitting. But the sitting only works when you're sitting right. That second sentence, when you're sitting right, is where most traders fail. They don't know if they're sitting for the right reasons or if they're frozen by the wrong ones. And that's the trap, because in the market, confidence and delusion look identical in real time. You can only tell the difference in hindsight, after it costs you something. Livermore wrote that his biggest losses came not from ignorance, but from emotional overconfidence. After a series of wins, he said he began to feel invincible, that the market had become predictable. That illusion was fatal. He described the feeling like this: you feel a strange calm, not peace, but a silence before the storm. You think it's control, but it's not. It's sedation. The kind that happens when the mind mistakes comfort for clarity. The trap doesn't just destroy accounts, it erodes awareness. You stop seeing what's there and start seeing what you want to be there. You ignore warning signs because acknowledging them would shatter the comfort of your illusion. And that's why Livermore always wrote in his trading notes, I must never let hope enter the room. Hope, that's the softest word with the hardest consequence. It disguises itself as patience. It feels positive. But in the market, hope is resistance to truth. Hope delays
delays exits. Hope magnifies losses. Hope transforms opportunity into obsession. Livermore knew that the market isn't designed to break your account. It's designed to break your discipline, because the market can only take what your emotions allow it to. And the more attached you are, the easier you are to manipulate, not by others, but by your own need to be right. So, here's the truth Livermore discovered. To survive, you must learn to distrust yourself, especially when you feel certain. Because certainty isn't confidence, it's complacency in disguise. So, let me ask you, what emotion blinds you most? Fear of loss or the thrill of being right? Comment your truth below. Because until you know your own weakness, you'll keep mistaking your feelings for signals. Next, we'll step into Livermore's own mind, how he built a discipline so cold, so systematic, that he could sense crowd emotion like weather and use it to time the market before it moved.
To win in the market, you must become colder than money itself. That was Jesse Livermore's way of thinking. Not poetic, not dramatic, but surgical. Because to him, trading wasn't about predicting price. It was about reading psychology in motion, the rhythm of human behavior compressed into numbers on a tape. Livermore never traded stocks. He traded emotion. He believed every price told a story, not about fundamentals, but about feelings. When he watched the tape, he wasn't looking for patterns. He was listening for tone. Was it urgent, hesitant, convicted, emotional? The tape spoke, and Livermore had trained himself to hear it. He once said, "The market is never wrong. Opinions often are." And buried inside that quote was his greatest insight. He didn't fight the market. He observed it until it revealed its intention. That was Livermore's timing blueprint, the art of aligning with psychology before price made it obvious. He believed that every major move had 3 stages: accumulation or distribution, when professionals act silently and the public sleeps; public participation, when the crowd finally sees the move and piles in; the emotional climax, when everyone believes it's easy money, right before it collapses. Livermore's brilliance was knowing which stage he was in. He didn't try to predict, he recognized behavior. If the market was rising and the tone was calm, he stayed with it. If the market was rising and the tone was frantic, he began preparing to exit. He called this watching the crowd lose its discipline. He noticed something fascinating. At tops, traders didn't act out of fear, they acted out of relief. They were relieved their bets were finally paying off. And that relief, that subtle emotional release, was the signal of exhaustion, the final gasp before reversal. Livermore's discipline was built on one rule: don't trust excitement. He knew that excitement is the enemy of timing because it blinds you to transition. The moment the crowd feels certain, the market begins to change. So he created a routine to keep his mind detached. Before every trading day, he'd isolate himself. No noise, no headlines, no opinions. He would write what he called mental temperature notes, simple reflections like, "The crowd feels confident. Speculators are chasing moves. Volume is emotional, not logical." If his notes contained more emotion than analysis, he knew the signal was near. Livermore called this reading the tape of the mind. It was his way of measuring the invisible, the psychology beneath price action. And once that reading became extreme, he knew timing had arrived. But here's the critical part, and the reason few could replicate him. When Livermore recognized the signal, he didn't always act immediately. He waited for what he called confirmation of exhaustion, a pause in the frenzy, a flicker of doubt among the confident. That's when he'd strike, not early, not late, but emotionally perfect. His blueprint wasn't mechanical, it was human. He used his own emotions as instruments of measurement. If he felt restless, he assumed others did too. If he felt the urge to rush in, he interpreted that as crowd contagion and stepped back. That's what made him cold-blooded, not emotionless, but self-aware. He said, "A man must know himself thoroughly if he is to make a fortune in this game." To Livermore, knowing yourself wasn't about journaling or motivation, it was about self-observation in real time, to see your own greed forming, to recognize your excitement rising, to catch yourself in the act of losing detachment and stop. He didn't try to outsmart the market, he tried to outweight the crowd. He turned patience into timing, and silence into signal. So here's Livermore's rule, stripped to its essence. When you feel the crowd's emotion inside you, you've already missed the move. That's the blueprint. Because the market doesn't whisper its next direction, it whispers your own emotion back at you. So let me ask you, can you tell the difference between a trading signal and your own excitement pretending to be one? Comment below, because that awareness is Livermore's first rule of timing. Next, we'll close with the final act, the cinematic conclusion, how Livermore's cold discipline became a philosophy of survival, and what his greatest downfall teaches modern traders about reading the signal before every big move. In the end, every trader faces the same signal, not on the chart, but in their own reflection. That was Jesse Livermore's final lesson. The man who once stood above Wall Street with perfect timing, the one who read markets like a symphony of human emotion, eventually lost it all. Not because he forgot how to trade, but because the weight of his own mind finally broke his discipline. You see, Livermore didn't fail from ignorance, he failed from fatigue. The emotional cost of constant precision, the daily effort to remain detached in a world designed to provoke reaction, eventually consumed him. But even in his downfall, he left behind a blueprint, a psychological map for those of us still in the game. Because Livermore didn't just teach how to make money, he taught how to keep your mind intact while chasing it. He said, "There is nothing new on Wall Street. There can't be, because human nature never changes." And that's the truth modern traders keep forgetting. We build new algorithms, new strategies, new data tools, but the enemy remains the same, our emotions. Livermore's timing blueprint wasn't about predicting price, it was about detecting pressure, emotional pressure. He understood that markets move in cycles of collective behavior, accumulation when nobody cares, public excitement when everyone believes, distribution when professionals quietly exit while the crowd cheers, panic when disbelief turns to despair. And somewhere between those emotional extremes, in the silence before the scream, lies the signal. That's where Livermore lived. That's where discipline hides. That's where timing is born. But the modern trader, he doesn't wait. He chases. He scrolls through charts, listens to noise, watches green candles as if they hold divine truth. And in that noise, he loses the one skill that made Livermore untouchable, the ability to wait without fear. Because the crowd can't wait. The crowd must act. The crowd must feel movement to feel alive. But Livermore understood something deeper. Waiting isn't weakness, it's control. It's the final form of strength in a world addicted to action. He knew that the greatest traders don't find tops or bottoms, they find clarity. And clarity only lives where emotion dies. Livermore's story isn't a cautionary tale, it's a mirror. It shows us that market timing isn't about precision, it's about patience. It's about reading human behavior so deeply that you can anticipate your own impulses before they manifest as mistakes. He once said, "A man must study himself before he can hope to study markets." So here's what that means for you. Before every big move, before the crash, before the rally, ask yourself, what is everyone feeling right now? And then ask the harder question, am I feeling it too? Because if the answer is yes, you're already on the wrong side of the trade. That's Livermore's market timing blueprint. It's not a system, it's not a setup, it's a state of mind, a quiet awareness sharpened by detachment. It's the art of seeing emotion before it becomes movement, the discipline to wait for silence while others scream for action, and the mastery of doing nothing until it's time to do everything. So I'll leave you with one question. When the next big move is coming, will you see the signal, or will you feel it too late? Comment your answer below, because the truth is, the signal before every big move doesn't come from the market, it comes from you.